Alibaba chief takes direct control of under pressure Chinese e-commerce business. Hi everyone, JJ here with The Art of Value. Welcome. Well, today we're going to get into the news that relatively new CEO Eddie Wu is going to take direct control of the behemoth Alibaba e-commerce businesses. Is this going to be good for the company, good for the stock as well? Let's get into it. New Group CEO Eddie Wu is now Chief Executive of Group and Online Retail Divisions in latest restructuring, the Financial Times says. The article starts, Alibaba chief Eddie Wu has strengthened his grip on the sprawling tech conglomerate, reshuffling management once again to take direct charge of its core e-commerce business as it loses market share to rivals PDD Holdings and ByteDance. That's Pinduoduo, of course, which had a good run. We'll have a look at the share price soon there. It has had a good run this year. At the end of a year of restructuring, executive changes and strategy reversals at the Chinese company, Wu is now chief executive of Alibaba's e-commerce unit, as well as chief of its cloud division and group CEO, roles he has only assumed in September. So he's wearing a lot of hats, taking control of e-commerce as well now. And if you don't know what he looks like, this is Eddie Wu. The article goes on, Wu had unexpectedly taken leadership of the cloud business, overturning a succession plan through which departing group chief executive Daniel Zhang was to head up the unit. And I've made videos about that in the past. The lead up to what's happening now, I'll put a link in the description to a video about the takeover there, the change of positions. It is clear that there has been a lot of tension internally between the controlling factions. This move should unify things, said Duncan Clark, founder of the Beijing-based BDA China consultancy and author of Alibaba, The House That Jack Built. Alibaba, The House That Jack Ma Built is a really good book. I've read it in audio form. I'm going to put a link to that in the description as well. I recommend that book if you haven't read that already. On Wednesday, the group announced Wu was replacing long-standing executive Trudy Dai as chief executive of the Taobao and Tmall e-commerce platforms. Together, the platforms provide the country's largest online shopping services, but they have been steadily losing market share to Temu, Pinduoduo owner PDD Holdings, and ByteDance's Douyin, the Chinese version of TikTok. Taobao and Tmall, Chinese e-commerce, does provide the greatest profit for Alibaba. It still does. It's still their biggest sector, and it's really important to the company, obviously, and Wu's taking this over directly to try and drive this forward. Dai is being moved to help form a new asset management company. According to the group, Alibaba has previously said that it would invest in a new $1 billion tech fund founded by Zhang. So it's going to be interesting to see how that develops as well. They've talked about that. They haven't provided a lot of detail, so there's some heavy hitters in that too. They're going to invest, obviously, and that'll be interesting to see what comes out of that in the coming months and years. Group Chair Joseph Tsai, who took over the role from Zhang in September, said on Wednesday that a new era requires a new strategic and organizational change. And there have been a lot of those this year. There's been a lot of shifting around. He added, I believe Alibaba will complete its transformation after undergoing this round of changes. In March, Alibaba announced it was splitting into 6 business units, and I made a specific video about that at the time. Put that in the description as well, with some targeting separate initial public offerings in a bid to unleash shareholder value. Alibaba's shares have sunk around 75% since its peak 3 years ago, just before Beijing intervened to cancel the US listing of affiliate Ant Financial. And Jack Ma was involved in that, of course. We'll take a look at the share price action since that happened, and more recently too, and how the share market has reacted to this news. Now, if you're getting value out of this episode so far, I'd appreciate it if you hit that like button, whether you're watching on YouTube or on X or on Rumble or indeed on Patreon, to help the algorithms to spread it to more people, because that's what we want. Thanks. Here we have an image of the 3 people mentioned in the article. We have, of course, Eddie Wu, and we have Joe Tsai in the middle, and of course Trudy Dai has been moved to another role. Alibaba's restructuring plan was initially met with investor enthusiasm, which faded with growing pessimism about Chinese economic recovery, and that's ongoing. It doesn't look great there at the moment at all. Last month, Alibaba ditched plans to separate its cloud business, which was disappointing for the market, citing new US restrictions on crucial semiconductors. It also put the IPO of its supermarket business on hold. Yes, both of those things happen, and the cloud business has not been performing very well. Really low growth compared to US counterparts, and they'll be wanting to change that. Eddie Wu will be wanting to see more growth in that area, so we'll have to see what happens, but that was a disappointing part of previous earnings. I also made a video about that. I'll link that in the description as well. During his first investor call as chief executive in November, Wu pitched the cloud business as the group's future growth driver, pledging to invest in artificial intelligence to bolster its core e-commerce business. Of course, every company's talking about AI at the moment, how they're using it, and we'll have to see whether cloud can grow from here, whether we can get that going from the very low growth that it is now back up to a stronger growth, and maybe even to the growth of its US counterparts, which are well over 20%. Alibaba needs to first fix the e-commerce business and integrate with cloud. It's unclear how they will do this, but the cloud business is important in the run-up to an AI world, Clark said. Yes, it's not going to be easy and probably not quick either. Investors in Alibaba have been waiting for a turnaround really in the share price. The business is going okay. I mean, Charlie Munger assessed the business and bought in quite big himself, so he thought it was good back before the share price dropped nearly 75%, or along the way there as it was going down. He didn't buy it at the peak there, but as it was going down, it's gone way down, as we'll see next. Alibaba's share price rose as much as 4.3% in Hong Kong on Wednesday, following news of the management changes. Once Asia's most valuable company, Alibaba was overtaken in market capitalization by its rival PDD in the past month. And let's take a look at these graphs. Now I want to give a quick shout out to Matt Scott, a new The Art of Value Patreon member. Thanks, Matt, and I hope you enjoy the content over there. Now, if you don't know, I've started this Patreon community. It's got exclusive content as well as all of the content that I make all in one place, all ad-free, of course. I'll put a link in the description, and I hope to see you over there. Do check it out. Here's a share price graph of PDD Pinduoduo over the last 5 years, and it's up 565% over that time. PDD did go down a lot too, but it's up 356% since early March this year. So it's had a really good run this year when Alibaba really hasn't. But we can see since that peak, PD is actually down 25.37% still. It's had a really good run this year, but it's still down from that peak, which was, we could say now, a pretty high peak. And the year to date, it's up 73.57%, which I can tell you is better than Alibaba. Here we can see the Alibaba graph in just one day since this news came out. We can see that it's up 3.97%, so it's had a good lift. Will it hold? Will this be the turnaround? Part of it, we'll have to wait and see. The US market is having a Santa rally at the moment, an end-of-year rally. Could Alibaba do that? Could it go on? We don't know. A lot of investors have lost hope that any good piece of news can turn it around, but PDD is certainly roaring ahead of Alibaba, which has made its market cap go way up, and Alibaba has been languishing. So we can see over the last 5 days, this was before the news came out, it's up just 3%. And if we go back a month, it's actually down 3.42%. And we can see in comparison to PDD, this year Alibaba is down 17%. And we can see since late October 2020, the Baba peak, it's still down over 75% since then, and 45% in the last 5 years, as I said. From the South China Morning Post, a little bit of different angle and slightly different information here. It says Alibaba names Eddie Wu as new Taobao and Tmall CEO in major move to fend off competition. So they're framing it as fending off the competition. And there's a quote from Ty's letter here. It says Eddie's leadership of both Alibaba Cloud and Taobao and Tmall Group will ensure total focus on and significant and sustained investment in our two core businesses of cloud computing and e-commerce, as well as enabling TTG to transform through technology innovation. So they're emphasizing there the cloud computing and e-commerce together, the core businesses. They really want them to be strong. They really are the biggest sectors, and they have to be strong if they want to compete with other companies that are coming up. Soon we will empower a new cohort of management leaders who have developed fundamental skill sets and experience from the bottom up. So emphasizing people coming through, new management, new blood that will kick the company forward. Dai accomplished the company's mission regarding Taobao and Tmall, and her new role in the asset management company will allow her to play to her strengths, the letter said. So again, that asset management company, it is going to be interesting to find out more about that when they release details on that. What are they going to do there to regenerate more investment and, I assume, more return on investment? Will they be investing in new startups, other companies to help regenerate return on investment? It's going to be interesting to see. Or is it just lip service and they won't be doing much? We'll have to wait and see what happens there. PDD, founded 16 years after Alibaba's establishment, so starting much later and growing very fast it has, was valued at 197.2 billion, more than Alibaba's 187.8 billion based on Tuesday's New York closing prices. So yes, it's been an upstart that's come through really quickly. I have said before, and I'm not sure if I believe the PDD numbers. There was this short report that came out not long ago from Grizzly Research that identified some anomalies. Are they hiding things from investors? Frankly, when I look at it, I mean, the numbers are really good. I'm just not sure I believe the margins in some of the numbers there. So they were implying that there's something fishy going on. I'm not sure, but I do have reservations about how good it is. Can it be this good? Are the numbers too good to be true? It's certainly doing very well judged on the numbers, but I just don't know if I believe the numbers for myself. That's not investment advice, just what I think. The rise of PDD even elicited a response from founder Jack Ma 3 years after his retirement as Alibaba's executive chairman. PDD, which also runs Pinduoduo global platform Temu, posted a 94% increase in its third quarter revenue, outpacing Alibaba's 9% sales growth in the same period. 94% increase. It is, if the numbers are to be believed, doing very well. We can get Temu here where I am in New Zealand. I know they're going international. Alibaba's trying to do that too. We do have AliExpress here. I've ordered through that. So there's these competing international platforms. So what do you think of this news? Let me know in the comments. Do you think this will help the company, Wu, taking direct control of the e-commerce division? Obviously taking more control of the company in general than the direction of it. Do you think it's a good thing? The market obviously thinks it is, or initially anyway, just a small boost there. But let me know in the comments what you think. Now I'm going to be making a bonus video about this. Check the pinned comment. I'm just going to be reacting to a couple of finance media clips about this news. Now, if you're watching on YouTube, I'm going to put a link here to a previous Alibaba episode that I mentioned just before. And here I'm going to put a link to a video that YouTube thinks that you in particular should watch next. So go and see either of those. And thanks for watching or listening, everybody, and I'll see you in the next one.